Well, there are indications that the federal government may be issuing Eurobond soon and plans to pick advisors through an open bid process. Tajuddin Ibrahim is the head of research and strategy at Chapel Hill Denham. He joins us now to look at this and MTN's debt issuance program, as well as outlook for the new quarter. Good morning, Tajuddin, and thank you so much for joining us this morning.
Thank you for having me.
Well, Nigeria is reported to be working on issuing a Eurobond in 2021. What are your thoughts on this?
Well, I think it is a step in the right direction if you consider the fact that we are very low on revenue generation when we talk about the budget of the government. From a revenue generation standpoint, the government is constrained, and that requires, some sort of funding of the deficit in the budget. If we take a look at the revenue generation and we consider oil revenue, for instance, one can easily argue that we are on a positive trajectory in terms of oil revenue generation and the ability of the government to generate more in oil, more revenue from oil this year, given the upward movement in oil prices so far this year. But when you consider the non-oil tax revenue and the other revenue element of revenue generation by the government, you will realize that the government is constrained and there will be need, for them to finance the deficit. And the deficit that we are looking at this year, based on the budget, is about 2 trillion or 2.2 to 2.3 trillion naira is planned, to be borrowed. And out of that, we expect Eurobond to be a part. And getting Eurobond in this case is positive, considering the fact that we have a depressed FX reserves. And if we have up to like 3 to 3.5 billion dollars from Eurobond, for instance, that will help to support the accretion to our FX reserves, and it will also strengthen the government, from in the sense that they will now be in a better position to fund, to meet FX demand that we currently have in the market. Based on news flows, the government is, or let me say the CBN is yet to meet up to like $6 billion, if not more, of FX demand in the market. So having or going into the market to raise Eurobond, in my view, is positive for the country from the reserve accretion perspective, and also from the standpoint of the fact that the country will be in a better position to meet FX demand in the market.
But then debt sustainability has been a major issue for Nigeria. What will be the implication of this on Nigeria's debt profile?
So on the debt profile, we will have higher debt, no doubt. But I strongly believe that, what really matters, number one is, the ability for us to consolidate and also be able to, embark on projects that will deliver value, for the country over the medium to long term. So when you borrow for projects that will deliver, value for you, the concern around the fact that you are borrowing becomes less, and the focus then will be around, the impact, the positive impact of those projects to your economy and how they could influence or strengthen further the growth momentum, that you see in the economy as a whole. And don't forget, we earn FX, as a country, so it is a lot cheaper, to borrow, in dollars, in this case, for the government. So you will be talking about 7 to 8% compared to when you borrow on the naira leg in the naira market. So what really matters, in my view, is what we do with the proceeds, and it should be around developmental projects that could uplift the growth of the economy as a whole.
Well, the Debt Management Office on Wednesday released the bond auction calendar. How do you see this playing out?
Well, the bond auction calendar, shows to me for the second quarter that was released, what it shows to me is that, the government is not aggressive in terms of borrowing locally. And I think this is consistent with, what is likely to happen in the local market, because what the market watches is, the aggressiveness of the DMO to see if they are aggressive in borrowing, and then they'll be asking for higher interest rates. And giving out higher interest rates by the government will render the government less effective in terms of their ability to spend on other projects. They will just be servicing debt. So we saw about 450 billion is the minimum that they're targeting in terms of borrowing locally in the second quarter, and the maximum number, they have published is 540 billion naira. That is how much they plan to borrow in the second quarter. If we put it on a monthly basis, it is between 150 billion naira to 180 billion naira. And I think this is not an aggressive number. An aggressive number will probably be looking at around 200 billion naira and above, as indicated in the March, March bond auction. In that auction, they were out to borrow 150 billion naira, but eventually they sold 262 billion naira in government bonds, largely because of the issue I discussed earlier, which is around the ability to generate more revenue. You will remember or bear in mind that we are beginning to see state governments announcing pay cuts, for government officials, saying that they do not have much revenue to meet up with the previous pay that they were giving their staff. So this speaks to a constrained situation for the government in terms of their ability to generate revenue. So going to the debt market is one option they cannot avoid this year, and they probably would have to borrow both locally and also internationally.
All right, let's look at some moves by some corporates. Yesterday, MTN Nigeria announced the results of its Series 3 and Series 4 commercial paper. What are the key takeaways from this?
Okay, so one key takeaway from that is that MTN was out, to raise 100 billion naira in commercial paper, and eventually they sold 73 billion naira in an environment where there's a bit of a tight, liquidity. And so that sounds like a good number if you consider, that number relative to how much, they were out to sell. But I think what is probably also important to bear in mind is that MTN was able to sell at a relatively competitive rate. So they had to give a bit above the government, in terms of the corresponding instruments by the government, the treasury bills in this case. And my view is that MTN is on the right path in terms of ensuring that they reduce the cost of borrowing in their books, which I strongly believe is positive for their shareholders. And what we should expect as announced by the MTN is also a possible bond program of about 200 billion in size, as disclosed by MTN yesterday on the Nigeria Stock Exchange. So that suggests to me that investors, particularly portfolio investors in this case, have more options in the market in terms of debt instruments they can invest in.
All right, well, still talking about MTN, like you mentioned yesterday, they announced that they've secured the approval of SEC to launch a bond issuance under a debut 200 billion naira. What do you make of all of this?
Well, I think it is positive because, previously some investors were thinking that there wouldn't be much supply of corporate bonds in the market just because yields are repricing upwards in the market. But I held the view, and I still hold that view, that what really matters is the quality of the corporate that is coming to the market. So we will still see more of such corporate bond issuances in the market. And I think MTN is coming out, to demonstrate that, they can still raise debt in the market despite the fact that interest rate is on an upward, trend. Bear in mind also, MTN that we're talking about is a very strong corporate that is rated AA by Augusto and Co. It is also rated AA by GCR. So what I would suggest to investors is that they watch out for more of such corporate debt issuances, but the focus should be, largely speaking, on corporate issuers that have strong corporate ratings by rating agencies. So I see a positive movement in this case by MTN, and I like the fact that it is a naira bond that they are looking at, which means that their book is unleveraged somewhat from an FX standpoint, and it is somewhat de-risked further from an FX risk perspective. So I think MTN, in my view, is taking the right decision around approaching the debt market at this moment.
Look at another development in the market. Well, this morning we're reading of the warning, all right, from yesterday, the warning by the Securities and Exchange Commission about the proliferation of unregistered online investment and trading platforms facilitating access to trading in securities listed in foreign markets. What do you analysts make of all of this?
So my view is, the SEC has, taking the right decision, because every market has its own rules and regulations. There are some things that you cannot, try or do in advanced markets just because of regulation. So Nigeria should not be a different market. Market operators are guided by the rules and the regulations put in place by the regulators, and they should abide by those rules and regulations. And I think what the SEC is doing is to call the attention of the Nigerian public and also capital market operators to the fact that there are rules by the SEC that must be followed in terms of selling securities to the Nigerian public. And they just do not want the Nigerian public to get bonds by investing in securities that they do not understand. We're talking about securities in countries that are not Nigeria in this case. So instead of taking that kind of a risk, I personally think investors should look inward at securities that have dual listing. We call these securities fungible securities because they are probably they are listed in one advanced country and they are also listed on our local market. I give you 3 good examples. Airtel Africa is listed. Primary listing is in London Stock Exchange, but secondary listing is in Nigeria. So they can buy into that kind of an instrument. ETI, EcoBank Transnational Incorporated, is also listed on the BRVN, but there's a secondary listing in Nigeria. Another very important or good security for consideration is Seplat. Seplat has a primary listing on the London Stock Exchange, but there is a secondary listing also in Nigeria for investors to take advantage. What I think could happen is for the Securities Exchange Commission, SEC, and also the Nigerian Stock Exchange to consider deepening or increasing the number of such securities, just so that they meet the demand and the aspirations of investors that want to have a feel of foreign securities in this case. That is probably what I would suggest. But I strongly recommend that the Nigerian public should be wary of the risk that is associated with investing in securities that you do not understand, in securities that have excessive FX risks, because you easily can lose not just you usually can lose your capital in that case.
All right, thank you very much, Tajuddin, for sharing your time with us today. We do appreciate it. Enjoy the rest of